Good hello to you. This, of course, is the 6th of September and 2022 at that. Can you believe it? Pushing to the last quarter of 2022. And what we're going to cover in this meeting today is something called price action. And, why I always look at price action, why I want to be specific about what it is and what it isn't, and also how we can actually use it, to look at a chart. This really helps you in any time frame and will really help you for day traders where you really don't have time for indicators and a whole bunch of nonsense. You got to glance at your chart and see what price action is actually telling you. So let's take a look at what exactly that is, shall we? Before I do that, there's our disclaimer, of course. Let's take a look. What is price action? And, let's explain trading price action. Well, price action simply is a methodology consisting of the analysis of basic price movement across time. So it's important to understand those two. You bring those together. You have price action across time. Okay, and it's how price changes the action of price. In other words, it's most easily observed in markets with high liquidity and volatility. We love those two things. But really, it's anything that's bought or sold in a free market will generate price action. Otherwise, your chart would just be a flat line, wouldn't it? So price action is a form of technical analysis, but not technical analysis as you have heard it described. What differentiates price action from most forms of technical analysis is that its main focus is on the relationship of a market's current price to its past or recent prices, as opposed to second-hand values that are derived from that price history, i.e. indicators. In other words, price action trading is a pure form of technical analysis, since it includes no second-hand price-derived indicators. Price action traders are solely concerned with the first-hand data a market generates about itself, its price movement over time. Price action analysis allows a trader to make sense of a market's price movement and provides him or her with explanations that serve as a way for that trader to build a mental scenario to describe the current market structure. You'll remember we spoke about market structure. Well, without understanding price action, of course, you're not going to understand market structure. So experienced price action traders often attribute their unique mental understanding and, the gut feel. That gut feel that we heard about and read about in that book by Mark Douglas about trading in the zone, that gut feel. Well, it's a unique mental understanding or gut feel of a market as the main reason for their profitable trading. That's what price action traders are basically doing. And price action traders make use of the past history of a market's price movement. Most typically, they focus on recent price action of the last 3 to 6 months. Okay. Not necessarily more than that, or the lighter focus on more distant price history. Okay, the price history includes swing highs, swing lows in a market, as well as support and resistance levels. And a trader can use a market's price action to try and describe the human thought process behind a market's movement. Every participant in a market will leave price action clues on a market's price chart. As they trade their markets, these clues can then be interpreted and used to try and predict the next move in a market. Of course, we love the dark pool because, they are great market participants and they leave a lot of clues for us. And we kind of get an understanding of where prices could move. So, why all technical analysis methods are not created equal? Why? Well, is price action analysis the same as technical analysis, you might ask? Well, the answer is quite simple. Yes and no. Technical analysis is defined by Wikipedia. Let's see what they say. They say a security analysis methodology for forecasting the direction of prices through the study of past market data, primarily price and volume. You'll notice that price action doesn't look at volume, by the way. However, technical analysis can and usually does include a plethora of technical studies, as it's essentially comprised of anything that isn't fundamental or news data. Are all of these technical studies, indicators, various chart patterns, etc., really necessary or worth it, you might ask yourself? Personally, I don't think so. Why do some traders become convinced that these various technical analysis studies are the ticket to financial success in the market, whilst others rely on raw price action strategies only? Well, we're going to explore those ideas, not only now, but more so in the weeks to come. And we'll just, like I said, this session is really just an overview, and we'll start getting into some nuts and bolts details about price action trading, get practical, start looking at charts from a raw price action analysis perspective. And hopefully that helps your trading somewhat, so that, like driving a car, eventually you're basically doing it without thinking. You're just looking at that chart, and you can then eventually, and you can, from a gut instinct perspective, see what the market is actually doing from the data it's giving you. Well, whilst we appreciate and respect technical analysts, okay, I mean, I've got no problem with them personally. I'm sure you don't. As pure price action traders, we focus on reading the raw price action on price charts. Okay, we don't subscribe to the idea that any technical study is a good study. Instead, we stick to a handful of simple but effective price-based principles and don't look at charts and a curve fit what we see into matching a textbook theory example, as many popular technical indicator-based trading systems actually do. I did say you can find a pattern on any chart and try and retrofit a pattern, and then that'll guide your behavior as a trader, and you might find you get yourself into trouble. Okay, there's hundreds of patterns, technical indicator settings, and so on and so on. Technical trading, even if narrowed down into a niche specific topic, can be very haphazard, and hindsight's often the way such technical methods are advertised or represented to the beginning trader, like Elliott Wave. If you've ever studied that, I've been studying that myself. Some good stuff, but it will get you lost. Unfortunately, relying heavily on indicators and other technical analysis methods that largely ignore price action often leads to dramatic long-term failure for retail traders. So it's no wonder that we've got a statistic out that 70% of retail traders fail. And this is why, because this is where the hard work comes in as a trader. Many technical analyst tools or methods are full of noise, really. If you've ever looked at those indicators, got yourself confused, of course, they are noisy. And it means they include numerous unnecessary variables like technical indicators, such as, and we've covered these in the room, RSI, stochastic, MACD. They got their purpose, but they are very noisy. And there are countless others that could just confuse matters. So we like to get down to basics: 1 candle, 2 candle, 3 candle, 4, as I said in boot camp. And really, that's the way to trade. The simplest explanation for why these technical indicators are simply a waste of time is that they're all just derivatives of, you guessed it, price action, aren't they? So it's really secondhand. It's looking at price action. So if you could just look directly at price action and understand it, then it's going to really add to your trading. If you're going to analyze something derived from price action in order to make a prediction as to where price might move next, why would you not just analyze the raw price action in the first place? I think personally it's because folks are scared of charts and candles, and kind of need some training wheels or crutches to try and make sense in the market. But once you move all that out of your way, you'll find that it might just actually be a simpler method for you. So by analyzing other technical studies besides price action, you're simply adding unnecessary variables and cluttering up the trading process, your charts, and most importantly, of course, your mind. Trading in the zone, as per Mark Douglas, what you don't want is a whole bunch of clutter in your mind. It's simply unnecessary to trade like this. All you need to make market predictions is raw natural price data that any market supplies you for free, basically. Don't believe the hype or any website guru telling you that you need XYZ, trading indicator or whatever the case is, because you really, all you need is price action. So why price action analysis is the best analysis method. Those that did boot camp will know that I like raw price action. Okay. I basically looked at technical analysis noise. I've, around the web and in books, and filtered the rubbish and condensed it down to what I know works and what's logical, really. I ended up with raw price action, price movement on an indicator-free price chart. Those are my best charts, just looking at raw candles. By price action, of course, we mean focusing just on that raw chart with nothing but candlestick price bars. That's it. Now, of course, you can have that in a Japanese candle form, or actually the old price bars, which I'll show you and where that is on TradingView and how that looks as opposed to Japanese candles. And we basically watch key levels of support and resistance and determine market bias and trend in the short term and the long term. And then we simply do this by visually observing or reading the chart, not relying on third-party instruments or tech studies. By using a specific set of price bar patterns or signals for entries and, to a lesser extent, exits, we can map the market first as price action analysts. Then we can massage or locate an entry after patiently waiting for a confluence of factors to align. Confluence of factors, of course, can be easily described by looking for trend, level, and signal. Okay, break that down to 3 letters, TLS. It's really what you're looking for: trend, level, and signal. Trend, level, and signal. And by doing that, we can put the odds in our favor. And simply means looking for 2 of the 3: trend, level, or signal. Just 2 of the 3, not all 3. And you want those, say, 2 of those 3 to align, and then look for an entry at the point where they align. Either a trend or a level and a signal, or a trend or a signal, etc. If you can get 2 or more of these factors in alignment, you have a potential price action entry on your hands. Technical analysis doesn't need to be more complicated than looking for the dominant market trend, identifying key chart levels, and then looking for price action entry signals. Anyone who tells you otherwise is either trying to sell you something or doesn't know what they're talking about. So without further ado, we can go through questions and answers around this and in the room. Of course, again, if you have any questions watching the recording, just drop your questions in the questions tab, and I'll get round to that and answer that. You can come and look in the room for your answer. But in the weeks to come, we are going to cover this more and more. Look at, a chart from a price action perspective, and help you out in your trading, especially since that I've given you kind of what is a signal. Remember, we spoke about trend, level, and signal just earlier on. You only need 2 of the 3, and that will help you out. So hopefully you enjoy what comes in the weeks ahead, and I'm certainly looking forward to refreshing this. It's always good to refresh your memory on these concepts, right? Good stuff. Have a brilliant rest of the day for those that are watching the recording, and speak to you soon.